Asia's economic rise is often talked about in terms of superpowers like China, Japan, or India, but there's one small country quietly sitting at the center of Asia's financial network: Singapore. Despite its size, Singapore has become one of the world's most powerful financial hubs, acting as a lender, investor, and financial gateway for many Asian economies. From massive infrastructure financing to corporate loans and international trade credit, billions of dollars flow through Singapore's banks every single year. In today's video, we're uncovering a side of Asian economics that rarely gets discussed: the Asian countries that are most financially indebted to Singapore. These are nations whose governments, companies, or financial institutions rely heavily on Singapore's banking system, investment capital, and global financial connections. Some of these countries are economic giants, while others are rapidly developing nations, but all of them share one thing in common: strong financial dependence on Singapore's financial ecosystem. We'll break down why these countries borrow through Singapore, how this debt impacts their economies, and what it reveals about Singapore's growing influence across Asia. This video isn't about rumors or headlines, it's about understanding the real financial relationships shaping Asia's future. So if you're interested in global finance, Asian economics, and hidden power dynamics, make sure to like the video, subscribe to Travique, and watch till the end, because the last country on this list might surprise you. 10 Asian economies with significant financial exposure to Singapore. Indonesia. Singapore has historically been one of the largest foreign creditors to Indonesia's external debt stock. Bank Indonesia data reported Singapore as Indonesia's top external creditor ahead of the United States, Japan, and China in a recent release. BataMNewsAsia.com. Indonesia's borrowing from Singapore reflects deep financial integration, particularly in corporate and banking sector borrowing, where Singaporean banks and financial institutions provide credit lines, trade finance, and investment capital. China, including Hong Kong. While China's total external debt is massive, it also maintains substantial banking and portfolio linkages with Singaporean financial institutions. Singaporean banks hold diversified loan portfolios that include significant claims on borrowers in China and Hong Kong. IMF analysis shows Singapore's banks have regionally diversified assets with 23% of loans going to China and related areas, indicating a strong credit exposure. Cross-border banking linkages make China one of the most interconnected economies with Singapore's financial sector. Malaysia. Malaysia is a major trading and financial partner of Singapore. Singaporean banks have significant cross-border claims on Malaysian borrowers, and many Malaysian corporations access credit through Singapore's financial system. IMFST.org. Additionally, Malaysia and Singapore share integrated banking activities across the Straits of Johor, and Singapore's banks are among the largest international lenders operating in Malaysia. Thailand. Thai corporations and financial institutions often tap Singapore's banking network for international borrowing, trade financing, and capital market access. Singapore continues to be a key financial hub for Thai firms issuing bonds or raising credit offshore, contributing to financial exposure. Philippines. Philippine firms and banks access credit from Singaporean lenders, and a notable portion of external corporate debt in the Philippines originates from Singapore-based financial institutions. While not always the top single creditor, Singapore's role in regional finance makes it a significant node in Philippine debt markets. Vietnam. Vietnam's rapidly growing economy increasingly accesses international capital via Singapore's financial system. Singaporean banks provide trade finance, corporate loans, and investment capital, contributing to overall external financial exposure. Vietnamese borrowers rely on external credit channels, including those through Singapore. South Asian economies. India. While not traditionally viewed as a top debtor to Singapore, Indian corporations and banks have sizable credit relationships with Singapore's financial sector. Many Indian bonds and loans are issued in Singapore's markets, exposing these entities to Singaporean bank credit and financial claims. Bangladesh. Bangladesh is another South Asian economy where firms and financial intermediaries use Singapore's financial markets for borrowing and credit exposure. While Singapore may not be the largest creditor, it is a significant international financial partner due to capital market linkages. Pakistan. Pakistan's external debt profile is dominated by multilateral and bilateral creditors, but the country's corporate and financial sectors also access credit channels that run through Singapore's financial system. Singapore often serves as an intermediary for international finance involving Pakistani borrowers. Cambodia/Laos/smaller Southeast Asian economies. Smaller economies such as Cambodia and Laos are increasingly connected to Singapore's financial markets through trade finance and banking linkages, although their total exposure is smaller compared to larger economies above. Singaporean banks provide critical credit lines for their private sectors, and Singapore's role as a regional financial hub ensures meaningful, if not always dominant, exposure. While we cannot produce a precise ranked top 10 list of Asian countries by debt owed directly to Singapore due to the nature of available data, we can identify which countries are most exposed to Singapore's financial system as creditors. These tend to be regional economic counterparts with significant cross-border banking linkages, external financing needs, and use of Singapore's capital markets, notably Indonesia, China, including Hong Kong, Malaysia, Thailand, the Philippines, Vietnam, India, Bangladesh, Pakistan, and several smaller Southeast Asian economies. Singapore's role as a financial intermediary and major banking hub means it rarely appears in sovereign bilateral debt rankings like Japan or China do, but it does feature prominently in cross-border lending and financial integration across